I'm here in Boston, where Mondelez is holding an investor day, and it's just updating its new financial targets under its new CEO, Dirk Van de Put. So the company, which is the big snacking giant behind Ritz crackers, Nabisco, Oreos, now says it has plans to grow organic revenue growth of 2 to 3% next year, which is an improvement, a step up in growth. But it's going to do that at the expense of profit growth. The company had been growing EPS adjusted for double digits over the last year under previous CEO Irene Rosenfeld. That's now going to go to mid-single-digit earnings per share growth. So those are the two big financial headlines. I did just have a chance to sit down with the brand new CEO. This was his first interview since taking over the company about 9 months ago, also the chairman of the board. Here's what he said about what he's telling investors today.
I think investors know that the margin focus has a certain runway, and you cannot keep on doing that because your top line is not justifying that sort of earnings increase. And so we are, I think, still coming up with a very interesting financial algorithm. I also think we're undervalued. If our multiple goes up, you get to above 10% TSR, and I think that is still a very solid equation.
So Van de Put is basically pitching to investors today, stop thinking about margin expansion. It's all been about cost cuts when it comes to food and consumer staple companies. That's been super hot with all the activists in the space, and also private equity firm 3G and Kraft Heinz leading the way there. He's shifting the model here, wants to focus on growth and sales at the expense of just cutting. And you may not recognize Van de Put. He is the new CEO of one of America's biggest top food companies. He came from a private Canadian frozen food business. They did mostly French fries and saw tremendous growth. He's actually a Belgian veterinarian that had all sorts of stints at packaged food companies like Mars, went into pet food there, has worked at Coca-Cola. So we talked a lot about the future of these big consumer brands, consumer packaged goods companies. I'm going to be playing the interview a little bit later on Squawk on the Street Guys about what he sees is the future and how millennials embrace these kind of brands a little bit differently. And I know you guys are kind of junk food enthusiasts. Check this out. From China, the wasabi-flavored Oreo, which is all the rage overseas. It's
Did
pretty
you try
cool.
one?
And there's also...
Wait.
I didn't try it yet. I'm excited.
That sounds horrible. Come on, try it. Open.
I think it sounds great.
Wasabi,
there's also a buffalo
hot.
chicken-flavored one.
Come on, open it. I want to see the face when you try it.
As you're doing that, did you ask him the only question I think we care about on Squawk, which is when he's going to rename the company? Because that's got to be worth a couple different multiple turns on the stock.
You know, I didn't ask them that, but you know that debate's kind of past, Andrew. I think that was a few years ago when they split it off from Kraft and people sort of knocked them for the name. I will say that this is a global company. I mean, this company has a ton of emerging markets exposure. Their biggest market is Europe. So while the U.S. is important, I think most Americans would just know the brand.
Does better in those countries?
Wait, let's see. You've almost got the cookies open.
I just think it's more global. I think, okay, I'm trying to open the cookies for you live on air. So actually, I have the buffalo chicken one, which doesn't have actual chicken in it, so I'll try that one.
Does that have sushi in it? I mean, have you had clam ice cream?
Or lobster ice
Sarah,
cream?
yes.
No.
Clam flavored ice cream is
What's your review here?
So this is not my favorite. Huh?
Thank you.
I'll try the wasabi. I think I'm going to like it better.